Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Well, you've probably seen the markets, you're looking at the turmoil, and you're wondering what the heck is going on. I will show you what you need to know. The first thing is that the crisis is on. I'm going to show you what that is. We're talking about, of course, inflation, but it goes more in depth. The second thing is tech stocks. These were once seen as the infallible and ultimate things to own, but now maybe not so much. The third thing is the big concerns that are ahead of us. I've got all of that and more. Let's begin. We are seeing that the GDP fell at 1.4% to start the year as the recovery takes a hit. What's going on here? Could it be possible that maybe all of that stimulus is wearing off? That's right. That's what this is all about. Because you saw in 2020 the unimaginable level of stimulus measures coming from the government, as well as from the quantitative easing and sort of that which is in between when we saw the special purpose vehicles being set up. My goodness, nothing like this has ever been done before, and it was on a global scale. And then it ran out. Yellen says more shocks likely to challenge the economy. Yes, of course. Yes. My favorite, Janet Yellen, has a few things to say. Well, talking about, of course, Ukraine and Russia, but what's underlying all of that? Let's never forget September 17th, 2019, we saw the Federal Reserve going far beyond anything they ever had before. The repo operations, right? Well, we found out 2 years later, beyond that date, you get to find out who they gave that money to, who they were working with. And of course, it was all the big names. I covered that here on the channel. All of those which you expect, Morgan Stanley and JP Morgan, Bank of America, and so on. And then they expanded their balance sheet at a rate at which we had never seen before, faster than QE1, 2, and 3. And still refused to call it quantitative easing. No, it was a technical adjustment. People haven't got this through their minds. We are now in 2022. They haven't figured out what happened September 17th and beyond. And then, of course, we get into 2020, and then they accelerated it. So I actually called the not QE, QE4, and then what happened in 2020 to be QE5, call it what you want. This expansion right here eventually came to an end, and that's where we are at today. So all of that to say, yes, in fact, Yellen is correct. You can expect challenges to the economy, but it's not from all the things that are happening right now. It's from everything before that. I'm only highlighting just a couple of years back. But of course, everybody that watches me regularly, I know you already know what's up. Investor who called the housing top and the bottom says it's time to sell. Now, this is fantastic because this bond manager sold at the 2006 peak and bought at the 2012 bottom. That's pretty good, okay? I mean, that's pretty good timing. You're never going to hit the exact bottom or top or what have you, but 2006 was definitely one of those moments where, okay, there's enough froth in this market. I'm heading for the exits. And so right now we can see that froth appearing yet again. Goya CEO warns that the world is on the brink of a food crisis. This is one individual that would obviously know what's happening, obviously see those details, and you could look at the UN Global Food Price Index. I mean, I said this, but anybody looking at it knew exactly what was going on, that prices were going to exceed what we had seen in previous cycles. It's no different than anything else we've looked at historically. Everything always surpasses what we had before, just like stock prices, just like housing prices. But when we see that with food, it hurts people where it's really, I mean, certainly people are making money off of this, and for them, it's a good thing. But for the average person, it's just not good. Lake Mead plummets to unprecedented low, exposing the original 1971 water intake valve. So that is, of course, very significant. So you've got water problems, you've got food problems, you've got inflation problems, you've got a crisis that is brewing right now today. At the same time, the central banks are hiking interest rates, are pulling away their monetary easing. They are going through all of this all at once, creating the perfect storm. Okay, let's look right now and what's happening with the markets. I promise I'll make it quick, but I will give you the hard-hitting info that you need to know. The tech stocks in the S&P 500 are down 19.8% for the year through Tuesday. Now, as I'm recording this, and then by the time you watch this, that information is a little bit outdated, but I will show you some more recent examples, okay? Because what you're looking at right now, all you need to know is that this is not what it was claimed to be. That's the point I'm trying to get to. We can see these influencers, I call them influencers on YouTube because they influence people to do things. They were telling them straight up, buy Teladoc. Teladoc, okay? A stock, what didn't I cover it yesterday? It was at 200 down to like 30. They were telling them, buy this, buy that. I mean, look, what have I got here? Amazon. By the time you're watching this, Amazon is now down, okay? On the aftermarket, it was down to about 26.30, I think it was, something like that. And that brings us back to the levels we haven't seen since June 2020, essentially erasing all of the gains, all of those gains. I mean, I could show you others. Look, let's look. I mean, what do you want to see? Tesla. Here we go. 877 right now. These are weekly charts, by the way. I mean, I could just go on and on. I won't. Peloton. The only reason why I show you these extreme examples, by the way, this has now broken down to the same level right here. This is probably March 2020. Yes, it is. March 2020. But it's basically at the lowest level it has ever been. Why? Because these were no, everybody's going to be getting a Peloton. Nothing could ever happen. This is fantastic. Okay? I think this is Netflix. Yes. What about this? Can I even get it on the screen? 199. It dipped below 200. When was the last time I was at 199? January 2018. Okay? If it heads just a little bit lower, if this continues, I mean, we're going back to levels 2017. I mean, how far? From IPO? Is that how far we got to go? I mean, this type of stuff here, this wasn't told to you. No. Everybody's streaming on Netflix. They're buying up all these different companies. They're doing so well as a company, right? But their stock performance doesn't necessarily have to correlate with how much consumption they have or how, what they're doing in their business, and they're buying up. Oh, everybody's watching Netflix today. Look at how these stocks perform, the performance. Amazon shares fall on bleak forecast and the slowest growth since the dot-com bust. Here you can see the revenue growth that has been declining here and here over the years. Looking at this, after hours down 9%, okay, 26.31. Yes, that's right. Tesla down another 2.62%, 8.54 at the time of this recording. The trouble for big tech stocks in two charts. Okay, so let's go through this real quick. You can see it. Manta, the Nasdaq's big five, Microsoft, Amazon, Nvidia, Tesla, Apple, going through all of those. They got a problem. Free cash flow growth year over year coming down significantly. In a negative, you don't want to see that, right? And then you see the tech stocks and the money printing. I highlighted that whole portion at the beginning. If you stayed into this part of the video, you get it now. Tech stocks and money printing go hand in hand. Does it mean that the Federal Reserve is printing a whole bunch of money and buying Apple and Amazon? No, while they were buying their corporate bonds, that's a whole different story. But you can see that they are correlated, okay? That is an absolute fact. The more money they print, the more these stocks can go up. But what happens when they don't print? Well, the examples that we do have for the overall markets have been from 2018 into 2019, and it did not, I repeat, did not end up very well for the markets as a whole when we look at all assets together. What's going on in April? We see that, things have come down significantly. Well, buybacks were basically off the table. Stock buybacks. The number one buyer of stocks is the company themselves. And they were in this blackout period through April. That goes away. Now we're basically towards the end of the month, and now we're going into May. And generally, though, May is a weak month, but the blackout period ends and stock buybacks can take place. I want to see what happens. Of course, I don't make any predictions, but I can certainly bring you what we are seeing today. For Chinese stocks, you can see the same thing. The CSI 300, the worst since 2008, the biggest sell-off in the first 4 months of the year since the global financial crisis. So this goes all over the place, okay? Yen's historic fall signals a rewrite of the global currency playbook. Rates gap sparked decline that has roots in struggling economy. Japan appears powerless to stop the currency from falling further. I, may I? May I? Are you powerless? Really? Is printing the most ridiculous amount of cash that you can for this entire period of time a good idea for your currency? Maybe, maybe not. Well, you tell me, what do you think? The yen's plunge to a 20-year low threatens to leave it significantly weaker for years to come, shaking up the global money flows and undermining Japan's effort to get its fragile economy back on track. How in the world are you ever going to resolve a problem that couldn't be fixed for literally decades by printing money, by keeping interest rates low, and doing that stuff in overdrive, and then somehow expecting a different result? Wake up, knock, knock. It's not going to happen. So there's the Japanese yen spot. You could see that just over the past couple months, it has been quite aggressive, to say the least. So basically, that's all for today. I just wanted to highlight the fact that we are looking at what's happening right now today. It's exaggerated. If you want some information for those who have not read my books, check out my playlist on the channel. Okay, I got incredible information there. At the same time, I also wanted to talk to you about, if you've been watching the channel for a little while, you know that now I've been getting Masterworks as a regular sponsor. I wanted to make something very clear about that, okay? Because I didn't really highlight it; it just kind of showed up. Unless you were on the lives. For anybody that were on the Money GPS lives, you know that the whole working process that was. Basically, Masterworks approached me directly. They said, "Hey, do you want to do regular spots?" I said, "Yes, absolutely. But I want to see what you got to offer. I want to see your business. I want to talk to you." So I've been conversing regularly with one of the people there, okay? And it's been great, okay? I get to say what I want in them. I can put it in any video I want, but I use that opportunity of, this is where I'm going to put the Masterworks sponsorship in, and I say, this is a great one to change the type of video that I do to one being focused on informing people like I would have done, let's say in my books. So it's not just the news, because I do the news regularly, but I get an opportunity to go, okay, let's take a step back and let's go to investments. Let's see what's happening with the economy as a whole instead of just covering the news. So I hope you do appreciate that. It gets the chance to vary the content, and also it supports the channel, and it really helps. Let me tell you, okay? So that's all. I just want to share that with you. If you stayed until the end of the video, thank you very much. I'll see you on the next one. Take care.